Hi, accounting concepts. We'll discuss here a few main accounting concepts. Business entity concept. A business entity is a separate and apart from other individuals or entities. The business and its owner are different. All the accounting is done for business and not for owners personal. When the owner puts the money, it's called capital, and when an outsider gives the money to business, it's called loan. In both the cases, capital and outside loans are obligations and liabilities for the entity. In other words, entity is an artificial person and owner is different. The only difference is that owner will get back his money in case of close of business after paying outsiders' liabilities. That is the reason in balance sheet in liabilities column both capital and outsiders' obligations are shown. Money measurement concept. It means that only those transactions are recorded which can be measured in monetary terms. There is no transaction in accounting without monetary value. Going concern concept. Every business is started with an assumption that the business will last longer and will continue. That's why all assets are bought with an assumption that they will give benefits to business for years. In going concern, the cost concept is followed, means all assets are recorded at historic cost. Cost concept. It can also be called as historic cost. The concept says that all assets will be recorded at their acquisition costs, the cost at the price they were acquired. With a period of time when assets value like lands etc. increase, the book will have the same value at which they were originally acquired. It has nothing to do with the enhanced market value. Realization concept. This concept allows to show assets on actual market value when business is being closed and assets are sold. Then the profit on sale of assets at market value can be shown. The company cannot increase the fixed assets value as per market price if it is a going concern and fixed assets are not sold. Dual aspect concept. This is double entry system that every transaction will have dual effects. Accounting period concept. Accounting books are closed periodically, whether annual, quarterly, or monthly, to have the results, and the results are compared with previous periods. Normally, the books are closed annually. Matching concept. It means all the expenses and income of the same period will have to be recorded in the same period. Accounting does not allow to record expenses or income of next period in current period. Like in current period, if rent is paid lump sum for a few months of current period as well as for a few months of next period. According to this concept, the portion of current period will be recorded in this period and remaining to be charged in expense next year. Accrual concept. It is somehow related to matching concept. If expenses for the current period incurred, whether paid or not, or income for the current period earned whether received or not, to be entered in the same period. Thank you and see you in the next video.